Kevin, let's talk SPAC. You got a SPAC going today. There's lots of questions about SPACs. Tell us about yours, but also let's talk about how the investing community should comp it and against what.
I'm an investor in many SPACs. My wine business, which has been growing for years and years and years, there's an old adage about wine. How do you become a millionaire in the wine business? Start as a billionaire. The only way to make money in the wine business is to scale it. So you're able to deliver millions of cases each year, service Costco, Target. But what's changed in the digital economy is I can now take a bottle of wine, and I know this is shameless promotion, but this is an O'Leary wine. It's going to be delivered direct to consumers in 46 states. We're going to be announcing that today. We have the ability now, with the laws changed, to actually acquire customers online, ship direct, keep 100% of the gross margins, less the manufacturing costs, customer acquisition. And we used a SPAC to build a pipe for $500 million so we can buy all the rest of the wine companies that are going out of business because they're too small. This, Vintage Estates is basically going to be one of the largest consolidators of the wine industry completely, because our strategy is scale, direct to consumer, and full retail logistics. So if you want 150,000 cases at Costco tomorrow, we got it. We can do it. I'm really excited about this. I'm a big believer in SPACs.
Kevin, why did you pick a SPAC as opposed to a traditional IPO?
Speed to market, speed to scale, access to capital, and we were able to drive a great deal. I actually became an investor through the SPAC, through the warrants, through the units, and I have many, many, many other SPACs that I have invested in as well. I think, Tom, you've talked about this. It's about the history of the management team, their executional skills, their history of actually doing deals in the private equity market. If they have a good history like the Gores brothers have, even Ackman, I'm happy to invest in those deals because they have great deal flow. And I like the attributes of a SPAC in terms of all the different ways I can approach it. Do I want the leverage of the units? Do I want to buy the unit? Do I want to buy both? All my option. I think it's a great vehicle.
Kevin, real quick, what should we make of the fact that there's no pipe investor?
That there's no what investors?
Pipe investor. Typically, in most SPACs these days, there's an additional investment made at the time of the deal. It's often seen as a credentializing mechanism. Long-term investors who are deciding they want in.
Because the company has lots of capital. I mean, it's a matter of how much capital you need. Because when you raise more capital, you're diluting yourself. You want to get the balance. The company has a long track record, Vintage Estates, and basically growing and expanding their business. I'm not worried about that at all. It'll have plenty of access to markets. It'll also now have a stock trading on the NASDAQ that we can acquire other companies with. We have leverage. I think people should open their eyes up to what a SPAC is. It's a faster way to go public, and it's an option. You don't have to use it. But by the way, let me give you some numbers. Tom's aware of this. There's over 200 SPACs that have to de-SPAC by the first quarter of 2022. There's going to be a ton of good deals and bad deals, because they're going to be forced to actually do these de-SPACings before they lose their seed capital. That may be one issue you can bring up in the SPAC market, but not every SPAC is bad, that's for sure.
Shepard Smith here. Thanks for watching CNBC on YouTube.